Hi, Carmen. How are you?
I'm doing great. How are you, Adila?
Good. Thank you so much for doing this with me. I really appreciate your time. And I just want to ask you a few questions because I deal with a lot of buyers at times, and hazard insurance and fire insurance come up quite often. Tell us a little bit more about hazard insurance, fire insurance, and let us know the difference between the two.
Okay, I would be more than happy. So actually, they are the same. So typically, you do hear the word hazard insurance thrown out there, and typically that's either from your realtor, your loan officer, your escrow. But essentially, it's the same. Hazard insurance is what hazards are covered under a typical homeowner's policy, which can be fire, vandalism, lightning, and hail. So essentially, they are the same. Homeowners policy and hazard and fire are all the same thing.
So the mortgage company really needs fire insurance. That's for them to get a loan, right? In order for them to secure the
That
property. Um,
Yes, that is correct. So they want to make sure that the home is protected for fire. Typically, if your home is in a high risk area, maybe there's an insurance company that won't write you, and all you can get is a fire policy. So typically, that's only the thing that's going to cover is the fire. It's just that only peril. Everything else you would need a separate policy for. But yes, the mortgage will require you to have a fire policy, and that is hopefully a homeowner's policy that will cover all the other perils.
so just to clarify, I know since we live in California and Southern California, we have a lot of Santa Anas and fires. So I know at times there's areas like when I sell properties out in Ramona or areas that are rural and they have a little bit more brush than other areas. It's a little challenging to get fire insurance. Can you explain to us what to do in that situation?
So typically, yes, since we have the fires, the '03 fires and the '07 fires here in Southern California, it has become a lot harder to find an insurance company that will write them, especially in the areas like Ramona, Vista, Valley Center, El
Right.
Cajon, even up in Riverside. It gets a little harder. When you're out looking for a home, you kind of want to look and see, okay, how close am I to a fire station? Anything within that's 5 miles or over, you're going to have a hard time. How close are you to a fire hydrant? Most insurance companies want you to be within 1,000 feet of fire hydrant, within 5 miles of a fire station, and they don't want for the home to be backed up in a mountain or for there to be brush area. So you kind of have to look at it. And if you do find your dream home and it is out there,
Right.
just know, okay, insurance is either going to be very high, or you're going to have to go obviously with a California Fair Plan policy that only covers fire. But there is a policy out there for you. But you do have to take that in consideration. If you are in a high risk fire area, insurance is going to be expensive. And if it is your dream home and you're willing to pay obviously a higher premium, whether it's out in Escondido, the outskirts of Escondido, Ramona, just know that it's not going to be as cheap as if you were in Carlsbad or Oceanside, where obviously there is not a higher risk of fire there.
So let me clarify. So if they go through the California Fair Plan, does that mean it's just fire? It is not hazard. Can you explain that a little bit more?
So it is a fire policy and it is a hazard. The only hazard that it's going to cover is going to be fire.
Got it.
It The Fair Plan policy is a named peril policy that's only going to cover fire, vandalism. Then you would need to get what is called a difference in conditions policy. And
Okay.
this is a policy that's going to cover everything else. So it's a gap policy. It's going to cover your liability, your personal liability. If somebody goes to your home and gets hurt, it will cover your medical coverage as far as somebody getting hurt, but they decide, hey, I'm not going to sue you, but I just want my medical bill covered
Okay.
because I trip and I fell. That's going to cover it. As far as a pipe breaking and causing water damage, that's where the difference in conditions policy would cover everything else except your fire policy.
Got it. So
This
they
is not required. It's not required by the mortgage, but it's something that we definitely recommend as an insurance agent.
and I highly recommend that too because there have been incidents in the past on different properties where there was a pipe that broke and they needed to do a whole reroute in the attic and that can get very expensive. So in this case, when you go through the California Fair Plan, you would also need a secondary insurance, just to clarify.
That is correct. We recommend it. It's not required. I know most mortgages do not require it because they only require a fire policy, and that's in essence what a California Fair Plan policy is. But yes, definitely recommend the secondary, which is your difference in conditions policy, also known as a DIC policy, definitely to cover everything else, because most of the times when we do see a claim here in the office, it's not fire. It's typically water damage.
Right.
So, and that's not going to be covered under your fire policy.
Now, that leads me to a point. I have had clients in the past call me and tell me, you know what, Odile, I put 2 or 3 claims in through the insurance company, and now I'm not insurable. What resources do they have? Because I think it takes maybe years before their claims fall off. What do you suggest in that situation?
So a claim is going to last 5 years.
Okay.
Unlike auto insurance, where an accident or a ticket is on there for 3 years, insurance claims are on there for 5 years. I always recommend to contact your insurance agent before filing a claim.
Okay.
Typical deductible now that we like to write, at least in our agency, is a minimum of $2,500. A lot of people mistake what a homeowner's policy is. It's not a home warranty. So you don't want to turn in those small little claims, because you might have 1 claim or 2 claims, and then you get that 3rd claim, and then you become uninsurable. Right. Companies don't want to write that. So typically we say go with a $2,500 deductible and turn in a claim for something major. Don't turn it in for $3,000, $4,000. We can't tell you not to, but as your agent, we would say, hey, don't turn it in. You don't want to then a year from now, then your company says, hey, you know what? Thank you for your business last year, but now we're not going to non-renew you because you've had 1 or 2 claims. So I always suggest is reach out to your insurance agent. Okay. See what other options there is. Okay. If you, in the case that you do have to turn into a claim, just know that with an agency, we're able to shop your insurance around with different markets versus a company that only offers 1 company. But there is options out there, but I always suggest just speak to your agent. We're your advisors and we're here for you.
Got it. And lastly, Carmen, I don't want to take too much of your time, but another thing that I see is being very uninsured, because with property values going up as they've done in the last few years and material costs going higher and higher, what are you suggesting as homeowners? Every so often do we have to look at our policy and making sure that we're insured enough in case of a disaster that we have that insurability. What is your advice on that?
My recommendation is when you do get your renewal every year is to look at it and see, hey, in the event of my house burning down or me having a claim, do I have enough insurance? As you know, the market value goes up and down. That right. Fluctuates. Insurance is to rebuild. If your house were to burn to the ground, what would it cost during that time to rebuild? Anytime you do a home remodel or you add an addition, reach out to your insurance agent and said, hey, I just redid my kitchen. I put in $60,000, $70,000. Can you run a replacement cost estimator for me? And what an insurance agent does is they go and they put in the year built of your home, the square footage. Maybe when you bought the home, your home was basic. It had just, linoleum. Now you put in some nice tile. Now you updated the kitchen. They will run a replacement cost estimator, and that takes a few minutes, and it's free to do. So definitely look at it and see the coverages. If it's not what it's going to cost to sell your home, what you can get, but what in the case of obviously the rebuilding of the home would be. And as you know, this past year, the rates for construction and just construction costs have increased at least 12%. So definitely make sure that you review your policy. And if you have questions, reach out again to your insurance agent and make sure that you're covered, because a lot of people in the 03 and 07 fires were very underinsured and they had no idea. They had a policy for 10 years and rebuild, remodeled, add additions, and then when they had a total loss, they just didn't have enough insurance.
Carmen, do you want to say the name of your brokerage or the agency you work for?
Yes, I work with Palma Valley Insurance Agency. We're an independent broker in Valley Center, and we've been around since 1978. I've been with the agency since 2011. And I've been doing insurance for, God, almost 20 years now.
Great.
But yes, we are independent. We carry over 30 different insurance companies, and we will make sure to shop your insurance around.
Well, Carmen, thank you so much. I hope this wasn't too much of your time, and I look forward to speaking to you on our next transaction. Take care.
Okay, well, thank you so much for your time. I really appreciate it.
Bye-bye.